Good night, everyone. Today is Wednesday, November the 30th, and around 11 p.m. New York time, and we're going to go with the daily technical video day. Guys, last night we knew that this high due to the 5 ways on the S&P, we knew that there is more continuation to the upside. So, where we are right now? Technically, it's like this. 1, 2, 3, 4, 5. This is 8 or 1. 3 backs, small, very small, 1, 2, 3, 4, 5. Now, this looks like it is two complete swing from the lows. Now, you see that this swing is giving you divergency already, a small one in an hour, 30 minutes, but it's giving you divergency. If you go kind of small, you're going to see that the divergency is kind of bigger, and then you're going to see how you get divergence in this swing and divergence in that swing. So, technically speaking, what do we have in the S&P? Well, technically speaking, in the S&P, we got 2 ways from the lows, 2 ways from 1290. So, 2 ways and 2 ways. What are we proposing send over the weekend? We are proposing a nest, and we're going to keep the nest onto proof run. Now, this is 2 wave. This is no 1, 2, 3, unless the market does something like this. Now, we, as a waiver, we have rules. As you guys know, we always say that we have a lot of rules. One of the rules is that my wave 3 needs to get to the 1.618 of wave 1. That's going to happen around 1269. In other words, another 30 points higher in the S&P. Let's see if it happens tomorrow. If you see that the S&P drop from here, all you need to see is the decline. If the declines looks impulsive, that means that then we have 1, 2, 1, 2, and then the S&P is going to go like this. If you guys see that it's tended to 1270 area, and then it declined corrective, and most important, make another 5, then the S&P is going to drop here, and the S&P is going to keep going higher, and then the count that we're going to have is this count that we've been showing to you guys for, I would say, about 2 months ago. And then that's the count. When we have 5, 3, 5, flat in the middle, 5, 3, and then if that's the case, what we have is we are ending right here, most likely, wave 1 of the first leg higher, and then the S&P is going to do something like this, and which is unbelievable. Well, like we have been saying, guys, we are fighting a monster. It looks like every time that the market is ready to the crash, that comes the killer, which is the central bank, say no crash. We're going to kill the crash. There won't be no crash. I don't know to where they're going to be holding the crash, but like I say, until 1580 is in place, guess what? You got to keep that charge, and you got to keep that bias. A point that I want to make here is that if you take a look, this decline in 2008, it took a total of 72 weeks to go from the high, 73 weeks to go from the high to the lows. You guys know how many weeks have taken so far onto the day? 143. So technically, you have retrieved the 76.4 of the 73 weeks in price, but you have doubled the time. That's correction, in my opinion. This is a big way. It can extend it, absolutely. But I believe that at the end, it's going to go lower. All right? That's for the S&P. So technically, in the short time frame, the market is a toss, guy. Very simple, a toss. It can go either to 1500, 14, or even, ideally, It depends on how you label this move, but this looks like a 5. If this is a 5, he needs to make 5. So he can go to the area around the 1400, or he can go lower from here directly to our target, which is around 520. It's a toss. Of course, this scenario is going to take a lot of, because the S&P is going to have a lot of effect in the dollar, as expected, right? Now, let's move on to the dollar, and let's put some pairs in the 4-hour chart. Let's start with the Norwegian krone. And you guys are going to ask me why this one was going to be the first. It's because when I did the 4-hour charts today, this is the one that comes to my mind that is very deep. It's very deep already compared to the rest. Very deep. And these things right here, it looks, we're labeling like this due to the feeble relationship in some degrees. But this can be a nest to the downside. It can be a nest easily with more extension. Now, what this is telling me is, and this is how a practical trader is going to take it. You got to take a step by step. And a step by step means, when we were right here, we were thinking about the possibility of the wave 4. Right here, we say 3 waves. But I want to start with this because, in my view, do not have the look of a 3-way. Let's put it like this to go with the whole market, but all you have needs to see that it's very possible. It is very possible, no, it's going to be possible that at least 565 area is going to be tested. And let's see the bounce from there. Why this area is the 50% back of this A-late, and also, if this count is correct, it's going to be the equal legs also for a proposal B-way here to the C-way is going to be equal to A. But like I say, this, when I was telling DV about a few minutes ago, when you see separation in the move, always start thinking the nest. I mean, sometimes trick you out, it's part of the deal, but it's like a right here, look, 1, 2, 1, 2, then you see the separation, right? That means wave 3 in some degrees. So the same way that you see it here, don't get surprised to see a very deep move in 3 waves to the downside, something like this, or even make a new low. As of right now, let's see how the new low react from the lows and how the reaction proves to be either corrective or impulsive. That's a message right there with that one. Now, let's keep going. Let's move on now to the euro. The euro, as you guys see right here, is a different animal. And I'm going to explain to you guys why. Because on the euro right here, you don't see separation. Tonight, we already trade the high on yesterday. It's congestion here. Now, our preferred count is the euro higher to 137.29 or 136.06. That's our preferred count. Now, let me show you in the 1 hour scenarios. Look, this is the 1 hour in the euro. What we're calling for is, remember, we have an order down here on the lows, on the 34 area. We believe that this move was a 3, and we believe that we need to get a 3 right here, right? Now, there is 2 alternative scenarios. The first one, I don't like it. A leading diagonal, a B-way, and then the euro complete right here. That looks good in the euro, but not in the rest of the market. The second scenario is a leading diagonal, and then this is A become 1. This B become 2. Then this become lesser degree 1, and then the euro from here is going to explode to the outside. That's another scenario. But the preferred is this one. Let's see when 136.5, 137 is traded, how the market react from there. Let's go there first before I start dropping conclusions. Now, cable right here. It looks the same scenario as New Zealand. Look, I'm sorry, as the euro. A, flat B, C, and then S, A, we believe that cable is a buy. From where? I believe that cable is a buy from 56.44, 56.18 against 55.21, looking in the higher degree count cable should look for the equal legs of this one. We should come around okay, this one comes today. That's why the high is there. And then if it's gonna go to 57.18, which is the 50 back, should trade 159 minimum. And then that also goes with the idea that it's gonna be 158.88 should be the C-way here, which is the 618 back of this one. That's for cable. Now let's go to the metals one. Let's start with the New Zealand. Why New Zealand? New Zealand was the only pair that broke the low of October the 2nd low in the dollar. The only one. Now, that drove me the conclusion that because what we have from the high in New Zealand on the daily and the weekly, there are 5 swing onto here. Now, we're expecting another leg down in risk. And that leg down in risk is going to become the W, the Y in the whole market from May 4. That's telling me that these whole things can be an structure. And look, like in Norwegian, we got separation here, right? So if this is a flat, like we mentioned the other day, that only a flat can be possible here, if this is a flat in Norwegian, guess what? The market is going to trade most likely to around 80.79. If this scenario is correct, 80, and from there lower. Now, Norwegian is being one of the weakest or the stronger pairs against the euro, against the dollar. Now, let me show you in the 1 hour the 2 scenarios that you can see the recovery. The first one is the flat. The flat is going to say that a recovery needs to be in person. And then you're going to label it like this. 1, 2, 1, 2, 3, 4, 5, 3, 4, 2, and the next. Look, the separation. That separation means wave 3 in labeling, most likely. Now, if you want to see a corrective and goes with the whole market, then you got to label it like this. 1, 2, 3, and then one leg ended here, a B, and then looking for 78.59 to complete the move that started from here should complete it around 78.59. So guys, in conclusion, after seeing the whole market, we draw the conclusion that the dollar has more weakness on it, and at least another high should happen. Now, this is the dollar index as index. You cannot count it. You cannot, this is a 3-way move here. I was telling that to David. This is a 3-way move with a triangle in the middle, very well defined. So it's corrective. That's the good news. The dollar as an index is corrective, in my opinion. Otherwise, you cannot count it. You cannot count it impulse it to the downside. At least on my knowledge, it's very hard to count it, impulse it. You can see, like from here, you have 1, 2, 3, you have 1, 2, 3, you can count it here 4 and 5, but also it can be, because this is a flat, then what happens is that right here you got 5 ways on the dollar. Look, this is a 5-way swing on the dollar, meaning that this needs to be part of the flat, meaning that onto here you have 3 ways, and then you have 3, 3, and 5 to complete a beat, and then another 3 here. And then, you cannot count it, impulse it to the downside, in my opinion. Now, the same scenario, most likely the dollar is going to trade 78.60 and lower for the final legs. And then the last thing that I want to mention is that maybe this time around, and we've been saying this, guys, for the last 2 or 3 weeks, maybe copper is the one that is screaming a rally in risk. Maybe it's copper the one that is doing it. And it goes like A, B, C, A, the B way. And remember when we were right here that we were saying, guys, copper is going to go higher. Risk is going to bounce. Nobody believed me at that moment. Remember? We're having a fight. This is the proof, guys. RSI do not lie. The RSI is your best friend when it comes to laboring. Look, what do we saying right here? This is corrective. This is a 3-way move. The move in risk is coming. Guess what? Here we are, guys. The move is here. Now, if this is correct, I don't want to say it 100% because I'm not sure 100%. But this is correct, and at the end, it proved me right. You guys are going to see the S&P about a new high. S&P is going to go to about the high in May, most likely. And then the dollar and the euro is going to go about 142.50. Pound about 160. It's going to go about 161. And then the low, the high that we have in risk in October is going to be broken. Now, but before we get there and we get the buyers, let's look like this. The next high in the dollar, the next low, the recovering for the next low in the dollar is the one that is going to dictate what's going to happen with the next, I would say, 45 days of trading. All right, guys? Hope you guys understand the buyers and understand their point of view. Thank you, guys.